Good evening. Anything that we discuss is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights. The purpose for making this video is to analyze Nifty options open interest data. We would be analyzing Nifty on multiple time frames and framing a view for tomorrow, that is 3rd June. Apart from the index, we would also be discussing our stock watch list for tomorrow. So let's start by analyzing Nifty options open interest data. So you have to remember that tomorrow is 3rd June and this weekly expiry contract would be expiring tomorrow. And if we see highest amount of calls have been written at 15,700 strike and highest amount of puts have been written at 15,000 strike. However, since 15,000 strike is far away from the current prices, we would be focusing on strikes that are near to the current price. So here you will see that highest amount of puts have been written at 15,500 strike followed by 15,400 strike. So it gives us a range for tomorrow uh, of 15,600 to 15,700 to the upside and 15,500 to 15,400 to the downside. And if you were to see the change in open interest data, what happened intraday today, here you will see that highest amount of calls, they were written at 15,700 strike. And you will see that in the money strikes like 15,200, 15,300, 15,350, they saw their open interest reduce. So it tells us that call option buyers, they book their profits, and call option writers at these strikes which have turned in the money have booked their losses. And you will also see that further out of the money call options also saw their open interest reduce at 15,850 strike. So and you will see that highest amount of calls have been written at 15,700. So as you would have noticed that at later part of the day we saw a rally in the markets and we closed at around 15,576 levels on the index. So just in case if markets trend higher tomorrow towards 15,650, 15,700 level, even in that scenario, call options that have been written at 15,700 strike would be expiring worthless. If we analyze the Nifty option max pain level, it suggests that highest amount of options have been written at 15,550 level. So if market was to expire tomorrow at 15,550, in that scenario, call and put option writers would be making profits and call and put option buyers, they would be suffering huge losses as on expiry large percentage of options they expire worthless. If we analyze the index on multiple time frames, here you will see that market is currently under control of sellers based on the monthly time frame as the monthly open is at 15,629 levels. And if we see the weekly time frame, you will see that market is under control of buyers as it is trading above its weekly open, which is 15,437. So the reason for this conflict is that on Monday, when a new weekly candle was started, the date was 31st of May. So a new month started on first, which is Tuesday. So due to which we have a situation in which monthly is currently under control of sellers and weekly currently is under control of buyers. So there is conflict in the market based on these two large time frames. And here you can see in terms of price structure, today we made a lower high and a lower low. And tomorrow, based on the price structure, we get the following scenario for tomorrow. If we trade above 15,576, we can trade towards 15,597, 15,634, and potentially 15,681 levels. In that scenario, we would potentially be starting a new uptrend with market making a new higher high and a new higher low. And below 15,507 levels, we can potentially trade towards 15,459 levels, 15,422, and 15,375 levels. So if we trade below 15,507 levels, in that scenario we would be making a lower high and a potential lower low tomorrow. So this downtrend can be confirmed, because today market formed a lower high and a lower low. So it could be a start of a new downtrend as well, or it could be start of a new uptrend again. So that is why we have to be prepared for both the scenarios. And the neutral price range is 15,576 to 15,507, in which one can refrain from making any trades on the index. Now we would be discussing our stock watch list. The stocks that we have chosen are NTPC, M&M Fin, VEDL, JSW Steel. All these stocks, they have formed an inside candle on the daily time frame. And inside candles are formed when there is an equilibrium between both the buyers and the sellers. So we'll look to establish the position if either side of today's high-low range break. So our first stock is NTPC. Based on moving averages, it is trading above 5-day exponential as well as 20-day exponential moving average. And in terms of moving average crossover, we are in an uptrend. So above 111.4 levels, we'll look to establish a long position with our normal size, and below 110 levels we can establish a short position in NTPC with half our normal size. Second stock is Mahindra and Mahindra Finance. Here you will see that today we had a fresh bullish crossover of 5-day and 20-day exponential moving averages. And although we formed an inside candle today, and it and prices closed above both the moving averages, so in this stock we would be conservative. That is, instead of normal size, we would be initiating position with half our size for both the directions if it breaks. So if above 163.3, we'll establish a long position with half our size, or if it breaks today's lows, which is 159, below that we can establish a short position with again half the size. Next stock is VEDL. So Vedanta is again in an uptrend based on the moving averages crossover, and it is trading above both 5 and 20-day exponential moving averages. So above 276.5, we would be looking to establish a long position with a normal size, and below 269.5 levels we can establish a short position with half our normal size. And our final stock is JSW Steel. Again, in terms of trend, it has a bullish 5-day, 20-day exponential moving average crossover, and we formed an inside candle. So above 709.1, we would establish a long position with a normal size, and below 696.45, we can establish a short position with half our normal size. Finally, I like to summarize that tomorrow above 15,576, we can trade towards 15,681 levels, and below 15,507 levels, we can potentially trade towards 15,422 levels. And broadly speaking, we're in a range of 15,700 to 15,400 based on the overall open interest data. And the max pain level for expiry tomorrow is at 15,550. So if market was to expire at 15,550 level, in that scenario, option writers would be making profits, and option buyers, they would be suffering losses, as large percentage of options, they expire worthless on expiry day. And our stock watch list comprises of JSW Steel, VEDL, M&M Fin, NTPC. These stocks have made an inside candle on the daily time frame, and inside candles are formed when there is an equilibrium between both the buyers and the sellers. So we look to establish a position if either side of the range breaks. So this is a neutral stock watch list. I would like to request you to stay tuned around 9:45 p.m. for a long or short biased watch list in which would be focusing on relatively strong or relatively weaker sector stocks, and do stay tuned for that. And in those stocks we would have definite bias whether we want to buy them or sell them. And finally, I like to thank you all for watching this video. Do hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel. Thank you.